Now, analysts at Meristem Research expect continued profit-taking to remain a dominant feature in Nigeria's equity markets this month, giving gains on select tickers, and investors also assess fresh entry points. Felicia Awolope, Senior Investment Research Analyst at Meristem Research, joins me now for more market movements. Thanks a lot for joining us on the show today, Felicia.
Thank you for having me.
Before we go into what's going on right now at this moment, let's look at the Mirror prior page, which was August. Walk us through the highlights of market movement and how this is not so different from what you're seeing now in terms of our market expectations.
Well, thank you for the question. And largely as expected, August came with a wave of profit-taking activities following the significant gains that the market got in July, where the markets gained 16.57% in just 1 month. And so, of course, it is just expected that the markets will be witnessing a bit of healthy retracement, which is what was prevalent in August. Of course, we don't rule out the effect of the announcement of the insurance reform, which bolstered activity for the insurance index. But given that the insurance index is pretty much made up of small cap tickers, which were not enough to maybe override the large sentiment in the market, which was for profit-taking activities. The market only gained around 0.3% for the month of August. And of course, I would not say that means that negative sentiment is back in the markets. This would just be healthy retracement as investors try to capitalize gains, seeing that stocks have reached significant highs, in July.
So we still have that bullish tilt. But now let's talk about volatility when we are looking at the sub-index now for banking, insurance. Oil and gas is really volatile at this moment.
Yes. So for looking at sector-wise, you will notice that sectors that have recorded gains, significant gains, particularly in July, months leading to then, saw more actions of profit takings because a lot of these stocks are close to their year high, and investors just want to capitalize the gains, have the gains in the pockets. Look at banking, the banking index. We saw that major takers like Access, like GTCO, like Zenith, they shared significantly, maybe during August, and it was just investors trying to capitalize gains that they've already seen. And of course, we believe that this poses an advantage as once these stocks have shared to a large extent, investors who were not able to enter into those stocks at favorable price would begin to retake positions in these stocks, and it's something that could eventually turn the tide of the market.
I'm quite curious, why is the sweet spot now when we're looking at the entry points?
I would say we're already seeing people take positions in the banking tickers. There are significant movements, there are significant transactions on some of these banking tickers as, we're expecting their results to come out. And so there's a possibility of interim dividend declaration. And so some investors are beginning to take positions in tickers that they believe could have, recorded significant improvements in their earnings for H1, and we will not have the probability of declaring attractive dividends. And it's something investors are looking at.
All of us are waiting with bated breath at this moment, waiting for them to release their numbers. But what sort of numbers print do you expect from the banks?
Well, to be honest, I would say the banks are still poised to continue to deliver, good earnings. Maybe we'll not be seeing so much gains as we saw last year as related to exchange rate movements and all that, because exchange rate has been pretty stable. But, investment activities, expansion of loan books, leveraging of digital services and all that, those are still factors that would continue to, bolster strong and robust performances from these banks, and is something that would incentivize investors, given the fact that some of these banks have also been able to recapitalize, and that gives them more room to expand their operations, product offerings and all that. It gives them more capital to even give out loans and all that. And I would say those are factors that would continue to position these banks for strong earnings and good performance.
I want to put you in a tight spot now. If you were to make recommendations, buy, hold, sell. Your recommendations?
I would say for most banks currently, tier 1 banks, they have strong earnings, they have strong fundamentals where you expect that they would continue to leverage their strengths. We have company-specific strengths, and it puts them in attractive prices. GTCO did over 100 naira this year, and is now down to around 89 naira, 100 naira, 90 naira, and
not so shabby.
You get that gives an idea of what this opportunities and upside potentials that you can take advantage of as an investor in the market. And so, yes, to be honest, tier one banks with strong fundamentals, banks who are able to continue to deliver value to shareholders and investors would be, advised equity assets.
A few moments ago, I just saw PZ Carson's numbers come through, but let's leave that for now. Let's talk about inflation. We're all still looking at the inflation numbers, expectations later by the end of this week, early next week, we should expect the inflation numbers to come through, and a whole lot of focus is still on the likely moves we should expect from the Monetary Policy Committee. Behind the cameras, we're talking about whether a hold stance or not would be the way to go, but walk us through where you see things from your perspective at Meristem.
I mean, given our expectation for inflationary pressures, for price movements in the economy, we do not envisage any sharp, surprise. Inflation currently has been trending downward for the most part of the year, and we expect that trajectory will continue. Of course, we do not rule out the fact that there could be occasional months of upticks due to month-specific seasonal issues and all that, but we expect that the overall trajectory for inflation is still downward. And as a result, we do not expect any surprise from the MPC, to be honest. We believe that, there's the possibility of a cut or a hold. We'll say a hike is off the table, at least for now. And so if we see a cut, it's a good thing for the equities market. If we see a hold, it means things are still looking not so bad for the equities market, and so we're not expecting any sharp, surprise or any surprise move from the MPC. We expect largely a hold decision, but of course, it's possible we see a cut, but no surprises from those two decisions, to be honest.
Fingers crossed, no surprises there. Felicia, thanks a lot for your time. That was Felicia Awolope, Senior Investment Research Analyst at Meristem Research.